Hello, folks, and welcome to episode 32 of the 11FS Spotlight Show. My name is David Brear, and in this weekly show, we shine a bit of a spotlight on the best and the brightest in the tech and financial services industry. We try to understand what is it that gets them going, growing, and really where they think the industry is going to be going to. A big part of the show, as it always is every week, is your questions. So got any questions or comments, or you want to get involved in what we're doing, then leave them in the sidebar and we'll weave them into the conversation as we go. So on today's Spotlight, I'm delighted to be joined by Dimitri, Dadiomov, and Matt Marcus, who are the founders of Modern Treasury. How are you going, Dimitri? Lovely to have you on the show.
Thanks for having me.
Really good to see you. And welcome, Matt. How are you doing?
I'm doing well, thanks.
Very, very good. On today's show, what we're going to be doing is talking a little bit about modern treasury and really what the future of bank payments is. I mean, it's a really complex space with a lot of different things kind of happening in it. So we're going to try and sort of summarize it down for you guys to understand a little bit more. As I said, if you've got any questions for the guys as we go through, feel free to chuck them into the chat. And Hannah, the producer of this show, will weave them in for you as we go. Maybe if we start off with the elevator pitch. Do you want to give us the view of what modern treasury is? Who's got the short straw? Who wants to start with that?
I can jump in. So thanks again for having us. So Modern Treasury is a payment operations platform. We help companies move money with confidence from initiating the payment to approvals to reconciliation and continuous accounting into the general ledger. And so any company that moves money as a core part of its product or service, we hope to provide software for that use case.
Very good. And I mean, that's not a small, in terms of your addressable market for that, then that's, this isn't just financial services organizations. I mean, sort of that moving money part of most businesses now, there is an element to that, isn't there? So, I mean, who's your audience? Who's your addressable market?
Yeah, you're exactly right. It's financial services for sure, but there's many other use cases in real estate and healthcare, in things like that. One example of a company that you can think about is a rapidly scaling company that is moving money as a core part of its service is Pipe. They're building a new asset class for recurring revenue, and as they do that, they have to build and automate and manage a rapidly growing set of money movements. And so being able to support them through their journeys is an example of a company that is, you can think of us as a customer kind of for us, where they are building for scale, they're building kind of with some ambitious goals in mind, and they're also building something that hasn't existed before.
Very good. Tell us a little bit more about your roles then at Modern Treasury. What do you both do?
So I'm co-founder and CEO. I the job changes on a daily basis, but I sort of play sweeper and try to make sure that everything moves forward.
Yeah, how about you, Matt? I like to joke to Dimitri that he got the worst straw in this. So I lead product for us, which means I get to actually spend a lot of time with our customers, working on sales deals, getting folks to use the software, be successful with it. I started out writing code, but I don't really get to do that much anymore. Now I'm more so setting the roadmap, working with our engineering team, and helping our customers day to day.
Do you know what? Funnily enough, I think the other co-founders of 11FS say something very similar to me, Dimitri, as well. So we can cry on each other's shoulder about that one at some point. But so I mean, what led you to this point then? How did you guys found Modern Treasury? Like, what was the journey before this?
We worked together at Lending Home. Matt and I and our third co-founder, Sam, we spent 3 years at an online mortgage company. And in the course of building that marketplace, it's now the #1 fix and flip lender in the US. We had to discover all these pain points that we then decided needed a solution that was maybe a little bit more scalable and a little bit more horizontal. And so when we started spending a lot of time in 2018, 2017, 2018, 2019, with a lot more companies, we discovered that company after company would kind of point us to a team internally called the money team or the payments team that was building something that actually looked very similar. And that really led us to the realization that there is a missing software product that we wanted to go spend some time building. And we founded the company in May of 2018.
That's interesting. I mean, as you say, none of those organizations started out with an intention to build that type of thing. It was almost out of necessity, really. They get to that scale and face that problem. And like, say, if there's a problem with no solution in the market, that sounds like a pretty decent opportunity. So how long's the company been going, you say? Sorry.
2018. So we just had our third birthday.
Oh, happy birthday! I mean, that's great. So how big are you guys now in terms of size of 30 people? Brilliant. Yeah. That's really good. I mean, I saw recently you guys have just announced a partnership with Silicon Valley Bank, which I mean, at 30 people, that's a really big step in terms of the changes and obviously everything that SVB sort of brings with that. Can you talk a little bit more about that?
Yeah. So, SVB was the first bank we started working with actually back when we were in YC in the summer of 2018. And we built out the technology with them and had our first customer banked at SVB. And so we've actually been working with them for a few years now. And over the course of that time, we built out new capabilities, met the team a lot, and figured out we have a really good relationship across a few dozen companies that work with both of us. And so really this was a continuation of that, just formalizing that into an official partnership where someone can go to svb.com, see a landing page about how does SVB work with Modern Treasury. They can have the confidence that this is, a real relationship between us, not just call it a technical integration like what you might see in other platforms. And it's also a referral partnership. So that way the SVB sales team can feel confident referring their clients to Modern Treasury. And so, SVB is the first bank that we're announcing a partnership with this. We have other banks in the pipeline that we'll be doing similar partnerships with over time. And, our ambition is to have pretty much any bank that a corporate might want to work with be on our platform and be a partner that we work with closely.
That's very good. How did the SVB relationship come about then? Because obviously, I mean, there's different people play different tacks, don't they, in terms of sort of how you go to market with these things. There's a lot of people who will, sit in a basement and develop what they think is the right idea for a couple of years. But, working with a real customer to develop something that really fits their needs, I'm so pro because it just takes all of that doubt that somebody won't care at the end of that process, right? So how did that come about and how did that sort of shape the journey?
Yeah, we came to SVB and all the banks we work with kind of in a different way to a lot of providers out there. We don't ask the banks to build any new technology. We know that they have existing rails, whether they're SFTP and flat files or some have APIs, but we're confident in integrating against those to offer our clean APIs to our users. So, in the beginning, it was definitely a unique angle to go at, and it was a lot of meetings over at the SVB headquarters downtown in San Francisco. But I think ultimately it came down to having a really good pilot customer. Sana Benefits, which is a healthcare company, was the first company we worked with over at SVB. And it was just immediately valuable to them once we had it up and running, and they could see the ease at which they integrated against our software. And so just building that trust over time, showing that we can build good software and that their customers find value, and not competing with them, just having a good software layer that is complementary to the bank's offering. So these things take time. We got to market, I think in hindsight, relatively quickly. We had our first live payments only a few months after starting the company. At the time, it felt like an eternity, but now I think now we see that it actually was relatively quick. So, and that speed is something that we've kept in the company. We try to build out a lot fairly quickly, and get to market with these offerings to really test them out with our users. So that was the first case of that.
Yeah, I mean, it's amazing that, the early successes they build momentum, don't they? Both in terms of your customers, but for your team as well. It really, delivery galvanizes everybody around more delivery, doesn't it? Which is a great thing to see. Particularly in, financial services, it's a lot of people have got some great ideas, but backing it up with execution is always the challenge. I mean, over those years, then, I mean, you guys must have sort of grown and developed. Dimitri, a business with 4 people to 30 people, that's the process, the change, the culture, all of those things, you go through interesting periods, don't you?
Absolutely. And I think anybody in any company who's gone through 2020, 2021 has gone through some interesting periods. But I think that as a relatively small team that sort of got hit by COVID and the pandemic and all the changes that has brought, certainly has led us to develop certain aspects of our culture in maybe an accelerated pace or maybe in ways that we wouldn't have otherwise.
Yeah, it's strange. I mean, we were talking slightly about this offline just before the show, but in some ways, there's an advantage of. I mean, you guys are a digitally born business, as it were, in terms of the processes and communication and structure. It's amazing how many sort of big incumbent organizations, JP Morgan Chases, that are sort of struggling so much with this period of time just because it's alien to them in terms of everything being digital and everything being a collaborative process. It's there's almost an advantage to being small sometimes in this period, isn't there?
Yeah, I think that's right. I think there's also a second order effect that we got a bit of a tailwind from, which is that a lot of our customers, which are kind of these digitally native companies that are going and changing things in maybe slightly more old school industries that are reliant on things like ACH and wire and paper check, at least in the domestic US context. Really, when you think about those companies, they got a huge boost during COVID. I mean, those were the companies that, if a company had a paper process where somebody had to go in the office and scan a bunch of things and sign them and so on, those were some of the first companies that really saw the most drastic changes to their business. And so as they were going into digitizing, health insurance, real estate, payroll, things like that, we were kind of second order beneficiaries of that.
Yeah. And have you found that in this period? Because obviously, I mean, in the Treasury space, as you say, there are a number of competitors, some of them actually a lot more traditional in terms of the ways in which the vendor relationship or the communication would happen. So have you seen that as a sort of a knock-on effect of this period, that you're getting more interest and more inbound from people who are a bit more digitally native?
Yeah, for sure. I think it comes in two flavors. I think from a go-to-market perspective, we think about companies that are, brand new and they're like 3, 4, 5 people sometimes, and they're just kind of setting up their first banking relationship, and they need advice on that, and they need to really figure out their flow of funds and things like that. And then you have companies on the other extreme that are, massive kind of legacy operations that are trying to start a new startup internally or start a new kind of product initiative internally. And they likewise, in some ways, a startup is a startup. So those companies oftentimes are starting at the same place that the 5-person startup is actually doing. So we like to serve both equally. We think that there's opportunities for both. I'm sure that there's going to be, fierce battles fought in a lot of these markets between kind of the incumbents and the new. But from a money movement perspective, an agency is both.
Yeah, I guess it's a volume play at that stage in terms of the opportunities to help the incumbents in that space. But it's an interesting one, as you say, that dynamic. Really, the benefit then ends up being with the customer, doesn't it, in terms of actually the competitive landscape of the end result. But I mean, if we look, I guess, at going forwards from here, where the world seems to be coming alive again, which is great in terms of movement and normality sort of coming back a little bit. If we sort of focus a little bit on the financial services industry, we're seeing new banking players being created, faster than ever. It seems to be easier from a legacy opportunity perspective to sort of enter into the market quicker than ever. But I mean, there's a lot of sort of misconceptions in that space as well, isn't there? I think people think it's a lot of people are doing it, therefore it must be easy, which is clearly not the case. So there's often quite a few misconceptions around processes. But what do you guys see in that space? Because as you say, your inbound might be 2 men and a dog trying to build a retail bank, but there's quite a lot of process still to go through, isn't there?
Yeah, well, absolutely. Go ahead, Matt.
Yeah, but I was just gonna say, I think for us, our focus, our customers are the what banks call corporates, or companies, not the banks themselves. And so we do see some folks who are building, call it new financial services companies on top of us. But by and large, where we're seeing the newer banks is mostly on the partnership side, where there are new banks that are being started in the U.S., whether they're getting Wyoming charters or there are different paths to it. Or you see some banks like Silvergate, where they have their proprietary Silvergate exchange network. There's Signet over at Signature Bank, which both those are tailored towards crypto customers primarily. And so we do see a lot of innovation there, where some of the more established banks are building out new payment rails, and then there are new players coming in with, like Avanti Bank is an example of a new startup bank, very focused on transactional services, particularly for crypto companies, but also for other verticals. And they have a unique model. And so, speaking with folks like that and seeing more people entering the corporate banking space for sure.
I mean, it seems as well that not just from a competitive perspective, but actually, I mean, particularly in the US market as well. And we've sort of seen this in Europe, but the US market seems to be kind of exploding from a trust perspective. The numbers of people who are, engaging with those organizations and the scale, the impact that they can have is really significant. I mean, do you sort of see any reason or I guess a kind of a rationale for that? It was very much driven in Europe by a sort of a mistrust of the incumbents and almost the right timing for that change. But do you sort of see any sort of particular sort of trends there in terms of why more and more people are moving to neobanks?
I think trust. I think you mentioned the word trust. I think that's the most important word in this whole thing, which is, if you think about banking historically, you have the large kind of buildings, the large columns, the kind of the gravity of the institution. It really goes towards trust, right? It really goes towards, how do you believe that this is the best kind of corporate, in the corporate sense, the corporate kind of banking financial institution partner for you as a company. And we see banks having very different segments that they're going after, and they're in some ways not, less product organizations and more sort of marketing and serving kind of customer focused organizations that are focused on serving specific segments. And so in that way, we think about whether you're a bank or a neobank, you probably have some focus area that you're trying to serve. And for some companies, we probably don't think of the same kind of mutual clients much at all, if you're focused on individuals and things like that. But if you're focused on, corporates, then how you acquire customers, how you serve them, what are the kind of product SKUs that you offer, are all the things that, really go into being the best banking institution for a specific company. So we don't particularly have an opinion one way or another. We're definitely seeing some exciting innovations from both incumbents and new banks, and we're sort of focused on making sure that the companies know kind of what are the breadth of options they have, how do they go to the right kind of institution with them, because it can be pretty painful if you're working with somebody who is not really sure if that you're kind of a right customer for them, and it gets into this kind of long drawn out thing where nothing is quite perfect and nothing is very easy, and so we try to kind of help companies really find the right partner.
Yeah, I mean, it is interesting, isn't it? That corporate space is quite difficult for people to sort of build towards, particularly in the fintech space. Corporate are cover sort of a multitude of things, doesn't it? We've seen globally SMEs start to be sort of treated a little bit better in terms of the SMEs, SMBs, in terms of like the really small end of it. But the complexity, I mean, big banks have been around for a long time. So the type of and depth of credibility and depth of functionality that they've managed to build up, even though it's not perfect, it solves particular problems for people. So I think we're a little bit of a way off, real disruption in the corporate banking space, just because of the level of investment it requires to build out all of the capability to do it. A two-man organization with really low level of complexity, relatively straightforward. But if you've got, like, say, gigantic organizations needing real significant help from Treasury, then it's an interesting challenge on your side, because you're, I guess, you're a modern day technology business, happens to be working in financial services. But how do you find that? And I don't mean this in a disregard to your clients or who you're working with. SVB is obviously a lot more technologically advanced than many incumbent banks are. But actually, at that stage, almost you've got to communicate your product and communicate your services in a different way when you're dealing with an incumbent bank than you would be dealing with a more nimble, small startup, I guess.
Yeah, I think this is it. On this point, around the capabilities, we find ourselves helping the banks quite a bit here, helping them push their capabilities into new areas. Like, an example of this is we have a virtual accounts product. So it's a way to create sub-account numbers within a DDA or an FBO bank account. So that way, when payments come in, who were they for? Like, which account number were these sent to? And a lot of banks have these offerings and some don't. And so we're helping those banks to build out those capabilities by giving them, here's our API spec and here's what technology we would need you to do to support this. And so we see ourselves helping those banks in that way. And then not every bank is going to have every capability. And And that's okay in a world where you have someone like us who can sit as that middle layer between corporates and the banks, because then as a corporate, you can go call it mix and match different banks. Like this bank might have better global treasury services, whereas another bank might have a virtual accounts offering that can help you out in the US. And so it's not a deal breaker. We help banks call it like win particular lines of business across different companies and help them think about their roadmap going forward to serve the corporates.
Yeah, but it's great, and it's great timing. I mean, like you say, the treasury space is really exploding in terms of the opportunity for it, because I guess we're in a period now where people seem so much more open. I mean, I've seen a lot of organizations in the past go exactly as you've gone, do you know what? I reckon we can fix that. I reckon we can build a thing that sorts this thing out. But when it's not core to your business, it's never going to be a service that you're evolving, managing, maintaining in the way that you guys are. So that sort of coupled with people at this stage being so much more open to integrating services into their core business to solve those problems. I mean, it seems like 2 years ago was the perfect time to be building this capability out. So what was it, luck or judgment, or just a bit of both, do you think?
We'll take both.
Yeah. Well, it's always a good space to end on that point. I always kind of think, like you say, you're educated, and that gives you the opportunity, but a lot of luck is always helpful as well, isn't it?
For sure.
So tell us a little bit more about what's next then for Modern Treasury. I mean, is it obviously the things that you've been doing with SVB and other clients that you've got, is it now about scale? I mean, what does the next 6 months to a year look like?
Yeah, we think about this in a few dimensions. One is called the money movement layer of our platform, continuing to both go wide in that. So if you look at our changelog post, we're doing a lot of things globally. We just shipped global payouts in the first quarter, so helping companies in the US pay out anyone across the world, whether it's via local payment rails or via Swift wires. We're also adding support for the European payment schemes, the UK, Australia. We're already in Canada. So helping our customers who are US based businesses expand their businesses globally. And that's really customer driven. Our ambition is to go global, but we are doing that with our customers, and combine that with new bank support in the US and deepening capabilities, sort of like the virtual account one I mentioned earlier. So that's one layer on the money movement side. There's software we provide. We're not just an API company. We also have a dashboard, which basically serves as the hub that our customers live in. We have customers who have dozens of their ops team, their finance team, who log into our dashboard every day to do their jobs. Because money movement is complicated, it's messy, you need to look things up, you need to tell a customer where their money is. And so when we think about that, what's the software layer look like? So new workflows, whether it's automation for things like sweeping payments or templates, reporting type functionality, better treasury management functionality. So really doing what we need to do to support the day-to-day job inside of these companies. And then the third part is kind of the new bets and ancillary new products for us. So when we think about our customers and what needs do they have, we'd rather focus on them than new customer segments. So if we define our customer as someone who moves money in their product, what else do they have to deal with? So right now we just launched a ledgers product. So every company that moves money needs a double entry ledger for their product, or they should have one. And their famous blog post for companies like Square and Uber about how they built their ledger too late. And so we're helping companies get that earlier. And so that's a product that we just shipped 2 quarters ago. And then we think about the horizontal value that we can provide, and that will stem us into new areas. And whether it's around payment success and fraud, also the treasury management space. So that's what you'll see us shipping a lot of over the next year.
Very good. I mean, it sounds so obvious when you say it out loud, but it sounds like you're just listening to customers and doing what they want. It sounds so obvious, but it's so hard to do in terms of that space. But that's great. I mean, it sounds like you guys are going from strength to strength. I'm sure in 6 months' time we'll talk again, and you guys will be even bigger with more customers at that stage. But I'm afraid I know you've got somewhere to be, and so do I. So we're going to have to wrap up at this stage. But Matt, Dimitri, so much goodwill for what comes next. Thank you so much for joining us in terms of coming on the show today. Where can people learn a little bit more about what you guys are up to?
So the best place is just to check out our website, moderntreasury.com. And we have a journal where we publish a lot of things that we find interesting. Some of them are change logs and new features, but some of them are just pure kind of interest things that we hope you find interesting as well.
Fantastic. All right. I know I'll go and check that out, and everybody else should do as well. Right. That's all we have time for you to actually today, and in terms of the content from 11FS this week as well. If you like what you heard, then make sure you head over to the 11FS YouTube channel where you can catch up on this episode. I'm definitely going to go and watch that intro again. It was captivating. And make sure that you can catch up on all the other episodes of this show as well. Again, Matt, Dimitri, thank you so much for coming in. Thank you, everybody, for watching this. We'll see you next week. Goodbye.
Thank you.